We know that McDonald's has been trying to position themselves as one of the value choices in this economy as things get a little bit harder for people trying to buy lunch, honestly. What did you make of these reports? Because it seems like the street welcoming them with open arms.
Yeah, thank you so much for having me on today. I think we were pleased by the print this morning. Honestly, it's been a really difficult environment for consumer companies reporting earnings, and in restaurants in particular. And relatively speaking, it was a pretty happy meal that McDonald's delivered. I think they were able to, talk about several different initiatives that they have done around marketing and their value offering and then menu innovation. And we think they're delivering value for those consumers who are seeking out value, but also changing up the menu and delivering solid marketing execution. So kind of delivering on three key metrics for them, which is helping drive both higher income consumer traffic and also sort of take share from a lower income consumer standpoint.
Well, let's talk about that breakdown a little bit more, because something that jumped out to me was you take a look at lower income customers. The McDonald's, the chief executive said that they actually saw traffic among that group drop nearly double digits in the latest quarter. So this pickup that we're seeing, it seems more like perhaps a trade down than it is, those lower income consumers coming in and spending more.
It does. I think we were encouraged to see from a higher income consumer, they talked about the industry data being up almost double digits, but conversely almost down double digits for the lower income consumer. But I think the commentary that they made around the value offering for that lower income consumer, they talked especially about the extra value meal. They called it the EVM that has been rolled out. And they've seen good success with that, particularly with sort of low income consumer from a share standpoint. But also they said about 30% of the transactions were those EVM offerings. So we think the lower income consumer is obviously quite challenged, but we think McDonald's is offering the right value offerings for those consumers to continue to be able to drive traffic when that consumer is wanting and willing to eat out.
Abby, what did you learn in the earnings just about how McDonald's is competing with all of the other fast food, fast casual options out there for, like Katie said, people that are just looking for an affordable way to eat lunch?
Yeah, we think, they're really firing on really three different cylinders. I mean, certainly the value offering. I mean, they talked about the McValue rollout last summer. They're continuing to do well. That extra value meal, the EVM, they're doing well offering those for, $5 or $8 for the consumer looking for a specific price point. But also, I think they're doing a good job of rolling out newness. They talked about snack wraps, which rolled out over the summer, and the first 4 weeks of that launch, 1 in 5 consumers ordered that. So I think they're offering enough from a value standpoint, enough to get consumers interested. And then just kind of the last thing is on the marketing side of things, they've relaunched Monopoly for the first time in almost 10 years in October. And they specifically said that that has helped in terms of driving momentum for the business in October. So keeping things a little bit fun for the consumer, but also delivering sort of the value where that's needed for consumers, whose wallets are a bit pressed.
Well, I'd love to bring this conversation more towards the portfolio because, as I mentioned, you're a senior portfolio analyst over at Allspring Global Investments. You cover consumer staples and consumer discretionary sectors in particular. That is your area of expertise. So, I mean, what does the competitive landscape that McDonald's sits in actually look like right now, and where exactly does McDonald's fall in that?
Yes, certainly. From a consumer standpoint, one of the things that we like about McDonald's is it's a bit more defensive, and you've seen that here of consumers are a bit stressed and strapped, and McDonald's is synonymous with value. For us, we see it as a way to obviously play from a discretionary standpoint, but an offering their offering is a bit more defensive in nature. So we see it as a bit more of a defensive staple. And I think being able to play in an environment that they tend to do well when we see more difficult economic times. So that's kind of how we're playing the name in this space. We like it for the long term, and we're long-term investors, and we think they're great operators longer term. And there's a lot that we like about them being able to grow the top line and then also margins. But we think here in the short term, it definitely has a nice defensive benefit as well.
What other consumer-focused names do you like right now if we're in this environment where consumers are a little bit more stretched?
We think one of the most important things here is companies with healthy balance sheets, and particularly as we head into the holiday season. Just those companies who are able to, have solid balance sheets, have solid inventory levels, and, depending on how the consumer is going to react heading into holiday, if markdowns need to occur, that we want to make sure that those companies have healthy inventory positions. And then just also from a free cash flow standpoint, those companies who can generate free cash flow in excess of their peers, so that if economic times get more challenging and the consumer outside of the lower income consumer starts to change more materially, that those companies can control their own destiny.